Well, if you think about our earnings forecast for the S&P 500 is $173 a share, up from 168 consensus. So if you put an 18 multiple on that, you get to a 3,100 S&P, which is going to be up 3 or 5%. So I think that's very logical. Don't forget that technology is really benefiting here from low interest rates. Technology has very long cash flows. They're long duration stocks. And as long as rates stay low, which I think they're going to do, technology is going to continue to do well.
Mona, you think the market is due for a pause, and I can see why you would say that after a 20% gain and with earnings growth probably negative for the quarter. But you've got a lot of stimulus coming into the market. A budget deal that's going to pump money in and lower interest rates that's going to pump money or keep money flowing.
Yeah, look, generally the backdrop for risk assets is benign. We got the low interest rates. We have a pretty low inflationary backdrop. We have earnings that'll probably slightly beat expectations, but our call is more for a tactical pullback. We think after a 20% rally and built up expectations for the Fed on July 31st. In fact, nearly 20% of market participants think there's a 50 basis point cut coming. So, the Fed might have to exceed already dovish expectations. And so there may be some disappointment from that. It's hard to tell where the catalyst for a pullback might arrive. We saw it back in May when the president tweeted about tariffs and trade. Perhaps some disappointment there on the horizon as well. But generally speaking, I think after a 20% run, we're due for some sort of tactical pullback, although we generally agree with the assessment that longer duration technology could be interesting for long-term investors.
Kirk, do I want to favor U.S. equities or international blue chips or what?
Well, I think short-term U.S. equities. Longer-term, we're very interested in international equities, especially if we think the dollar is peaking. Right now, you can put together a portfolio of 50 international stocks with a 3.8 dividend yield, which is a great yield, and they're going to do very well once the dollar is peaked. We're not calling for that near term, but I think at some point here the dollar will come down to earth, especially if the other guess is right and we get a 50 basis point cut. Obviously that's not bullish for the dollar.
What would happen, Mona, if they didn't cut next week?
Yeah, I think the market will be severely disappointed. 100% expectations right now for a rate cut and perhaps even a rate cut in September and December. I do think that the Fed has communicated that it is heading towards a rate cut. I do think Jerome Powell's commentary has said he's pointing to, interestingly, clouds and global environment as well as trade rather than what's happening domestically.
But we have heard the Boston Fed President Eric Rosengren pushing back against this a little bit. If we get a decision for a quarter basis point cut even and it has a number of dissenters, how do you think the market would interpret that?
I think it will all come down to the commentary. And, luckily we will get a conference out of Jerome Powell again, and I think we'll see what he has to say. I think he'll indicate again whether or not he's looking at some of those global fears rather than the domestic fears, because I think we can all agree the domestic data has held up decently well, especially around the consumer.
Kirk, how does the unsettled situation on global trade figure into your outlook, if at all?
Well, I think the unsettled nature of global trade is actually keeping interest rates low. China is clearly slowing down and the world economy is slowing down. So I think that, helps the narrative of lower interest rates. But obviously, it's something we have to keep an eye on. And, you do worry about Europe and tariffs on Europe, tariffs on autos, those kind of things.